Hi everyone, welcome to today's video. So let me start today's video by telling you the story or fascinating story about Tesla. Now Tesla is a stock that we are all aware of. Elon Musk is the major promoter of that stock. He keeps on tweeting and every time he tweets, Tesla stocks also makes a new high, etc. etc. But here is the fascinating part about Tesla that everyone is betting on Tesla to become the number one electric vehicle company in the world. The valuations of the stock has soared over the last 1 year, and it has soared so much that Elon Musk himself has sold $1 billion worth of stock in the last few months itself. What is the moral of the story here? The moral of the story is that Tesla is a great growth story. It's a good firm. There is nothing wrong with the firm per se, but the valuations are so high that even the major promoter of Tesla has sold it. Now I can hear a lot of clicking noises. People would say, Akshat, Elon Musk has sold because of taxation issues, bunch of other different things, etc. etc. Yes, those are all smokes and mirrors, but the real reason why Elon Musk is selling his stock is simply because of the fact that Tesla stock's price right now is overinflated. That is the bottom line. Now, something very similar is happening in the Indian market also, and this is what I'm going to focus today's video on, that I'm going to talk about 3 Tata stocks that according to me are slightly overinflated. There is no major problem in the firm itself, but it is very important for us to understand in a framework oriented manner how to identify slightly overpriced stocks. So I'm going to talk about Raamdeo Agrawal's QGLP framework. This framework will help us understand and study these Tata stocks in a more prominent, thorough manner, and then we can make a call whether to enter these stocks right now. Should we sell it? Should we hold it? What should we do with these stocks? Before I kickstart the video, just a very quick shout out to our sponsors for today, which is taxbuddy.com. It is an excellent platform that allows you to file your taxes in an efficient manner. It's an end-to-end tax management solution provider. If you have gotten GST notices, if you have got income tax department notices, they can help you out with that as well. So you can check the link in the description box. There is a discount code that you can use using the referral link. So let's get started with the video, and let me first and foremost help you understand a little bit better what QGLP is. Now QGLP has 4 parts. First is quality, the quality of the company. Second is the growth of the industry. How can the company grow? Third part is the longevity. Longevity means that, okay, great, the industry is growing, the company can also grow, but will it survive for a long enough time to give shareholders their due return? And final point is that at what price you are entering it, because there have been numerous instances where the company has been really good, really good, but people entered at the wrong price and they are paying dearly for it. An example would be, in my opinion, something like Mrs. Bector's Food. Now, there is nothing wrong with Mrs. Bector's business. The revenues are positive, profits are positive, but you can see that the stock price opened at roughly 600 rupees and right now it is trading at 390. Worst, it never gave an opportunity for the investors to get out of the stock. So if you enter even a good stock at a horrible price, you are going to make loss out of that. So keeping that perspective in mind, let us start having a discussion around Tata Motors, Tata Power and Tata Chemicals. Let us see if these stocks right now at the price that they are trading, are they meeting Mr. Raamdeo Agrawal's framework? So let us start first and foremost around the quality and growth of these Tata Group companies. First, let us talk about quality of the company. So the quality of the Tata Group management is really strong. So this can be a strong check mark in terms of quality. It's one of the most well managed companies in India right now. And the management is very clean, clear, works in the interest of shareholders. That's a rarity in the Indian ecosystem. If you find companies like these can actually generate wealth for shareholders. So from a management point of view, it's very clean, right? It's very clear. It's a very good brand, right? So even the brand is really good. The goal of the company is very clear now. With the new management in place, what they are trying to do is they are trying to clearly bring down the debt, because they also understand that the business landscape has changed massively now. It is not about just creating high-end infrastructures and churning out products. They are being very cognizant of the debt. So even the goal is very clear. They are undertaking an ecosystem play, right? I'll show you subsequently on the video how Tata Motors, Tata Chemicals and Tata Power is working collaboratively together to foster that electric vehicle ecosystem. So the quality of the company is really sound. If we talk about the growth of the industry, then the industry growth, as I've been saying on several of my other videos also, it's only a matter of time that the conventional automobiles that you see currently, they will get replaced by electric vehicles. It's going to happen. It's just like commonsensical from that perspective. And some companies in India are going to benefit from that change. So from that perspective, the growth of the industry is imminent, right? It is already growing. Previously, there were concerns around the technicalities of how to manufacture EV, whether it can be done at a good price point compared to conventional vehicles. So all those positive changes are coming into the picture, and as a result, it's only a matter of time that conventional automobiles will get replaced by electric vehicles. There is absolutely no FOMO being created. This is a simple commonsensical analysis there. So from a quality and growth perspective, there is no problem with the company. There is no problem with the industry. As the world moves towards EVs, companies like Tesla, companies like Tata, companies like Maruti will grow. There is absolutely no problem there. Now my issue is the second half of this framework, right? So this is where we need to focus on, which is the longevity and price. So let us first talk about price in detail about the three companies in question today. We will take a look at the pricing chart first and foremost, and then I'll give you my commentary on what I think about the prices. So here is a very interesting chart for you. If you analyze the data from 26th March 2020, the COVID data, the moment COVID happened, up to the highest peak that this stock has made, there has been a 731% return on this. It has been a multi-bagger stock, really excellent performance given by this stock for a wide variety of reasons. If you take a more recent trend analysis of this stock, you will see that, hey, the stock grew by approximately 95%, almost 100% in a matter of a few months itself. Now it has started to correct and come down a little bit. So we need to understand why the stock has moved so much. This is an excellent article that came out on Economic Times, and it's a fairly recent article. So let us just quickly go through some of the key points. Tata Motors has become a proxy bet for investors looking to dabble in the EV revolution underway globally. The success of Tesla and other Indian government push towards electrification has nudged investors to search for companies that may benefit from technology disruption. Very important paragraph. They are literally saying that, hey, you know what? EV going to happen. Tesla already a proven case. In India, some company is going to grow. Probably it's Tata. Everyone is taking a bet from that perspective, and therefore this has become a growth story. Please understand a very important point at this stage, that the price rise has happened not because of the performance of the stock. It has happened because of what? It has happened because of a growth story that is being played out. The same issue happened with something like Paytm. That Paytm, great growth story. Zomato, you know what, great growth story. But no, it is not translating into stock prices per se. Because at the end of the day, all these stories are great, but they eventually need to translate into increase in revenues, increase in profits at some stage. Zomato right now is a loss-making company. Same goes for Paytm, loss-making company. Stories are great that, you know what, they have like excellent data. They are going to capture literally everything under the sun, and they are going to become the biggest player on the earth. Great, but that story needs to be proven correct, right? If the story is not going to be proven correct, then you are in deep trouble, right? So let us understand challenges from Tata's point of view, that everyone right now is playing on this growth story that, hey, EV going to be big, all that stuff, amazing. But let's look at some of the challenges. Expectations from Tata has shot up through the roof at the back of $1 billion investment by TPG. And therefore, Morgan Stanley has also said that this investment marks the rise of the start of EV story in India, and Tata Motor has decidedly taken the lead. So what are some of the key challenges? Let me very quickly take you through that. For starters, the company will have to show its gaining from the easing of semiconductor shortages. So primarily because of the supply chain disruption that has happened in China. I spoke about that on yesterday's video also. In case you have not watched it, please go and watch it here. Then second thing, the company will have to improve its free cash flow positions. This is very important. Now here you need to understand the business model of Tata Motors right now. If you take a look at the sales of Tata Motors, this is what you will see. 78% of its revenues comes from Jaguar, right? Which is huge, right? Which is huge. And Tata Motors is not an Indian play. It is an international play. It is a global play. So the EV story need to be correct in India, it also needs to be correct outside India. Tata will have to compete really well against entrenched players like Tesla also to a certain extent, because right now, if you take a look at location-wise breakup, you can see that majority of the sales of Tata comes outside India, not from within India. So this is a very important point for you to understand. Now the third key point is that Tata will have to start delivering on its EV promise with successful product launches. Now this is a very important component, because you will see that there was a snafu that happened with Maruti Suzuki. Okay, word of the day, snafu. Please Google up what it means. So if you study this article more, you will see that Maruti Suzuki India was struggling to launch its blockbuster model in SUV space. What does this mean? That it means whenever companies, even established companies like Maruti or Tata, they try to launch their new models, those models can fail. For example, it happened with Tata Nano. Huge bet in India, did not go well at all, right? Same goes with Maruti. It was trying to launch some vehicles but could not gain traction. Bad stuff. So all these product launches do fail. Every time such a scenario will play out on a growth stock, that stock will get hurt really badly. That is what I fear might happen with something like Tata Motors, because the valuations are so rich right now that any type of failure in the market is going to cause issues with Tata Motors stock prices. Now here is one very important point that I will make in conjunction to Tata Motors stock price. If you consider Maruti Suzuki stock price, take a look at 1 year return for Maruti Suzuki. The returns have been minus 3.81. Okay, so Maruti Suzuki can again become like a leading player in India in the EV segment. It's not as if that Maruti does not have any distribution network, or they don't know how to launch vehicles, or they have problems in terms of exhibiting sales. It is a very good solid company. It can also generate massive sales. But on the flip side, if you take a look at Tata stock or Tata Motors stock, then what do you see? So if 1 year return for Tata has been 170%. Now it's not as if that there is anything that is stopping Maruti from entering into the EV space. If the conventional automobile industry is changing to EV, then Maruti will 100% jump on it, right? It is going to depict some level of competition for something like Tata Motors. It is not going to stay isolated and say that, you know what, we have given up the race, we are not even going to compete. They are going to compete and the entire space becomes super competitive. So right now, Maruti is not getting any rich valuations whatsoever. Now the moment you see some big player making infusion of capital in Maruti and Maruti taking that plunge of EV, then yes, it will fight a lot. Its stock prices should technically rise a lot. So if at this stage I have to buy a company, I would rather go with something like Maruti over Tata Motors from this simple perspective. Now many of you would say, Akshat, you know what? You're talking a lot about price, but Tata has one specific advantage, which is the ecosystem play, which other companies do not. So let me explain that very quickly. What does that mean? So in order to understand Tata Motors ecosystem play, it's fairly simple, right? And fairly intuitive. Let's try to understand this from a very simple example. For example, in order to create an electric vehicle, what do you need? You need to have a motors company that has the manufacturing ability and bunch of different things. But in conjunction to this core strength of running a motors company, you also need a bunch of peripheral things. For example, you need batteries, right? You need batteries. You need energy. For example, it's preposterous to think that you can currently use thermal energy to generate electric vehicle. What problem does it solve, right? It does not solve any problem. People will not buy that argument, because people who are buying electric vehicle, one of the core reasons, especially in Western countries, is that we are buying electric vehicle because we want to move away from polluting sources of energy. So thermal energy in large quantums cannot be used to build electric vehicle, right? So this is where something like Tata Power comes into the picture. Tata Power has clearly announced, and I'll put the snippet here also, that currently they are generating almost 33% of their electricity via renewable sources of energy. Going forward, they are going to increase this ratio. They are going to produce even more electricity via renewables, and this will feed into producing of these electric vehicles. Now this becomes an ecosystem. Similarly, if you take a look at batteries, Tata Chemicals is already in the process of pivoting and manufacturing lithium-ion batteries as well. Now that can be contextualized again for this EV space. All great. Now you would say, Akshat, this sounds awesome. I'll simply go and buy something like Tata Chemicals, or I will simply go and buy something like Tata Power. So why should I not do that? Okay, so let me explain that by taking you through some specific numbers. So here is the pricing chart for Tata Power. It has again given a run-up of 750% since pandemic. If you take a look at more recent run-ups in the last 6 months, so let us take it from May, right? Then also it has given a run-up of roughly 170%. The run-up has been huge. Let us look at the performance of the company. Does it deserve this kind of run-up, or is it again driven by a story? So let us look at numbers. So 2018, the sales were at 26,000. Right now also, it's not as if that some amazing transformative performance has happened. All that has happened is that there has been an announcement that, hey, move towards green energy, reduction of our debt. That is our goal. And some structural changes at the corporate level, that corporate is undertaking a lot of corporate governance changes, and because of which the company will improve. Agree, right? I'm not saying that, hey, these are not positive changes. Very positive changes. Very bullish on Tata myself. But does it deserve like 700% rise in the stock? That is something that is crazy to me. This is clearly not happening in the numbers. It's just a simple story right now that, hey, a lot of changes have happened at Tata. Ecosystem play, QGL framework, not P. QGL framework is somewhat stable. So Tata will survive this race. EV sector will become really big. Tata will become like a leader. Tata Power will move to green energy sourcing that will supply raw material to Tata Motors, which will be able to manufacture product at a very low price point. Tata Chemicals will come into the picture. It will start supplying a bunch of raw material again to Tata Motors, and Tata will become a world dominant player. Now, if this is the story that you're believing, I'm not saying that this story is incorrect. It might very well be correct and I might be wrong here. But I think that there are too many permutations and combinations that need to be right for this story to play out. There is just too much risk, in my opinion, in terms of price, right? In that entire QGLP framework, QGL sounds really good, especially given the ecosystem play for Tata companies, be it Tata Motor, Tata Chemical, Tata Power, Tata Steel, right? So all these companies are really good. But this is where I have issues, right? In terms of price, the price have skyrocketed. So if you are taking new positions in this stock, please be very careful. I personally am not taking new positions in these stocks. I already have existing positions in some of these stocks, because honestly the stock price is being driven by a story. Now, just to round off our conversation, let me also briefly talk about Tata Chemicals, right? So if you take a look at the growth of the stock from pandemic levels, this has given a rise of approximately 435%, right? So that has been the peak of the stock during the last 1.5 years. Extremely high valuations in my opinion. So right now the upside looks very limited and the downside looks very prominent. Now, exactly how the beating of the share might happen. So if Tata Motors misses its product launch, that will bring down the stock price. That might be a great time for you to aggregate the stock. Number two, if other competitors, for example Maruti Suzuki, if they also start amping up their game in the EV segment, great option for them. This might again hit Tata Motors share. Number three, if all this story does not translate into sales, you will see huge beating of these stocks if the numbers are not able to live up. I'm not talking about growth. The stock will grow. For example, if currently Tata Motors hypothetically is selling 1000 crore of stuff, and if the markets that has given them this crazy valuation has estimated that their sales need to go up by 3000 crores, and if they are able to improve their sales but not to this extent, they will get severely thrashed in the market. Something similar has already happened with a company called as UiPath. UiPath sales have been growing, profits have been okay, but the issue is that the estimates are not getting met, what the analyst had predicted. Now, same story in the next 2-3 years might play out for Tata, and that can lead to bad stuff for you. So from that perspective, be very careful. If you are looking to invest in these stocks, please be very mindful and start aggregating this stock in small quantities only. I hope you enjoyed the video. Please give it a thumbs up. Also, please check the links in the description box for Tax Buddy's discount code. In case you have any taxation related issues, do check their firm out. Thank you so much, and I will see you the next time.